Chairman Powell, I can't let an opportunity go by without raising the issue of the Fed Now real-time payments system implementation. You would agree that if we can get the system into place, it will save millions of Americans billions of dollars, would you not?
Yes, I would.
And so that's why I just want to encourage you to move very quickly. As you know, the system is scheduled to go up next year. We had an earlier hearing in May in this committee, and Brookings Senior Fellow Aaron Klein, who's spent a lot of time monitoring this system, shared his concern that we weren't moving fast enough to hit that date and fully implement it. So I just want your commitment, Mr. Chairman, that you are focused on this and that it is a priority.
Very much so. We're very focused on doing it right and also on time. And that's next year.
Right, because it especially impacts, of course, people living paycheck to paycheck, right, who make a deposit in a bank, but it doesn't clear. And then they get tagged with all sorts of overcharge fees and things like that. So I just, other countries that are a lot less advanced in terms of technology, the United States have figured this out, and we should be there now. I just want to turn to really the issue of the day, which is this challenge in navigating between keeping a strong economy moving and low unemployment and dealing with price stability. On the good news front, and I think you've testified to this earlier, the United States is doing a lot better than our sort of near-peer economies when it comes to economic growth and quickly reducing our unemployment rate. Isn't that the case?
Yes, generally, we're further advanced in our recovery, I would say.
Yeah, so that's good news, and we want to keep that going. We also obviously want to deal with the price increases, and the concern, which has been shared by others this morning, is that many of the causes of those price increases are beyond the control of the Fed, and I call them the 3 Ps: Putin's war, pandemic supply chain disruptions, price gouging. Senator Cortez Masto raised that. And so I think the challenge is, how do you navigate increases in interest rates when a lot of the drivers of price increases are beyond your control? And I want to raise a specific kind of case study here, which is in the housing market. Because you would agree, would you not, that increasing the supply of housing can help reduce housing prices, right?
Sure.
Yeah. But what we're seeing now is that with rising interest rates, obviously new investments are more expensive. We've seen housing starts fall by 14% in May. So that means fewer housing opportunities, less supply, fewer workers engaged in building new homes. So if you could just use that as a sort of case study of how you're going to navigate these cross currents.
So interest-sensitive spending is a very important aspect of how our tools work. And in the case of the housing market, what you're seeing is higher mortgage rates. So you're actually seeing demand move down quite significantly. Many indicators suggest that fewer people are visiting homes. The wait time for selling a home is increasing. Housing sales are moving down. Housing starts are moving down. And overall, it's a slowing in the housing market. And I think what you will see, or many forecasts call for the increase in housing prices to slow pretty significantly now. You've seen very large, as you know, increases in housing prices really since the beginning of the pandemic, and to the point where all over the country you have housing, people 5 bids above the ask the second the house comes on the market. Well, that's cooling off now to a more sustainable pace. So what we hope is we can get demand to that part of the economy to slow to a more sustainable pace, and get the housing market back on a more sustainable path where there's a better balance between supply and demand.
I appreciate that. I'm just going to use my remaining time to sort of push you a little further on this issue, not specifically with housing, but given the fact that so many of the factors that are driving price increases are beyond our control, and you talked about core inflation. what is your confidence level that we will have what is generally referred to as a soft landing, where we won't overcorrect in raising our interest rates to the point that it begins to really hurt our economy, workers, and wages? What is your level of confidence that you can navigate a soft landing for the economy?
I mean, it is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months, thinking there of the war and commodities prices and further problems with supply chains. And the question of whether we're able to accomplish that is going to depend to some extent on factors that we don't control.
Well, Mr. Chairman, if I could, but this is the point I think many of us are making. The factors that are out of your control are not going to be susceptible to those costs being brought down, oil, gas, I heard you earlier, food, by the measures you're taking. And the risk is that the measures you're taking will slow down other parts of the economy without getting us the benefit of lower prices. So I think that is a big theme today, and I just look forward to continuing our conversation about how you're going to thread that needle.
Can I say that the other risk, though, is that we would not manage to restore price stability and that we would allow this high inflation to get entrenched in our economy. And we know from history that will hurt the people we'd like to help, the people in the lower income spectrum, who suffer now from high inflation. That will hurt them more than anyone. So we can't fail on that task. We have to get back to 2% inflation so that we can have the kind of labor market that we really want.
I appreciate that, Mr. Chairman, but as you know, the prices that people are experiencing most vividly day to day is the price of gas at the pump and the price at food at the grocery store, both of which are things that you've said are beyond your control. So thank you, Mr. Chairman.
Now, Senator Daines from Montana is recognized for 5 minutes.
Mr. Chairman, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.